All right, guys, we got Parker on, Joseph on, John on. So I'm going to give my preamble. Thanks for joining today's X Spaces. I'm Dan Kang, DK, head of IR at DeFi Dev Corp. As mentioned, I'm joined by our CEO, Joseph Onorati, CFO, John Han, and COO/CIO, Parker White. We will be walking through a plain English overview of some recent updates on the capital side, specifically our S1 filing last week, our S1 filing this morning for our new equity line of credit, and sort of how they fit into our long-term mission of growing SOL per share. We will not be discussing the timing or pricing of any potential securities offerings, nor will we be sharing any material non-public information today. That said, before we begin, I do want to remind the audience that remarks during the Spaces event may include some forward-looking statements. These forward-looking statements are subject to risks that could cause actual results to be materially different. Those risks include, among others, matters discussed in our most recent filings with the Securities and Exchange Commission, and we disclaim any obligation to update any forward-looking statements. So, with that, Joseph, Parker, John, thanks for joining us today. Let's start just kind of very, very plain English. I want to go through maybe some definitional things. This is actually an exercise I had to go through like a few months ago when I joined you guys, because there are a lot of these instruments that are out there that are really confusing, and I think it's just helpful to get a sort of a 101 on how these things work and keep it really educational for the audience today. So whoever wants to take this, please, by any means, Joseph or Parker, just tell us, what exactly is an equity line of credit, or an ELOC, as we call it? How does it work exactly? I think those sort of mechanical breakdown would be pretty helpful.
Yeah, I can do it, I guess. Y'all hear me okay?
Loud and clear.
You sound
Good,
great.
thanks. Yeah, so equity line of credit, an ELOC, is a capital facility that lets us sell shares over time to a designated investor when market conditions are right, I would say. And we filed the registration statement this morning to cover the resale of the shares by the investor that we may issue once the registration statement becomes effective. Yeah, so it's a way to sell shares out slowly, essentially into the market over time. So yeah, there's a headline number on top of it, but the idea with an ELOC is a leak out kind of slowly into the market when the issuer, the company, thinks it's prudent to do so.
Yeah, and I guess I'll piggyback off that. I'm sure lots of people here are familiar with what an ATM is. MicroStrategy talks about their ATM a lot. This is not an ATM, but in function or in practice, it ultimately achieves a similar goal. It does so via a different mechanism, but ELOCs are typically used in place of an ATM under specific circumstances for companies. So you can kind of think about it roughly in that same bucket, although there are some important differences that don't make them exactly the same.
Yeah, helpful. I mean, maybe Parker, tell us a little bit about why a company would ever use an ELOC. I think there's, just this notion that you go and you run this thing and it's dilutive, and shareholders, inherently suffer because of it. So maybe walk us through the rationale of ever tapping through an ELOC.
Yeah, so the ELOC allows us, as Joseph highlighted, to kind of leak shares into the market, sell shares into the market. Again, kind of indirectly via, a third-party investor. And so, going back to the kind of the sailor play of being able to sell shares when you're at the stock is at a premium to NAV, that allows us to just raise more dollars to buy more SOL. So it's a pretty important part of our SOL accumulation strategy, being able to get more shares into the market, raise capital kind of on an ongoing basis via that, and then just steadily stack more SOL. So that's kind of why we would use an ELOC and why it's pretty advantageous to have one in place for us.
Got it. Helpful. The Yeah, I remember having to walk through folks just at a high level this idea of accretive dilution, right? The idea that generally speaking, when treasury companies tap into something like this functionally, whether it's an ELOC or an ATM, obviously MicroStrategy has made the term accretive dilution very famous, whereby issuing equity at some multiple above 1x NAV allows you to actually accrue more of the underlying asset on a per share basis. So, even though headline folks just sort of see more shares going to the market and they assume dilution, there's an inherent NAV accretion that's actually going on underneath the surface. So, maybe walk through. Anyone could chime in on this one, just like what the difference is between an S1 and an S3. High level definition for each of them, and then why register the ELOC under form S1.
Yeah, I can take that one. So S1s, S3s, they're kind of two methods to register securities so that they can be freely tradable. These are two different forms that the SEC has available. Form S1 is, I would say, more widely used. You see it used all the time with things like IPOs, SPACs file S1s. You saw all the Solana ETFs filed S1s. So it's a kind of a comprehensive registration statement for a sale of securities or to make a sale of securities available or to register securities essentially. So just because a security is registered doesn't mean it's automatically sold. It just means that it now is possible to be sold. So S1s are kind of this complete registration statement that is commonly used in the market. As Form S3 is a different form, and it's commonly described as like a shelf registration. And it essentially, for companies that meet specific criteria, it essentially allows a company to kind of register a block of shares kind of in theory. So not assigned to a specific deal or a specific investor. It's just like, hey, we want to issue shares in the future up to this amount. And they're just kind of be there, quote unquote, on the shelf. So then what that allows companies to do is to go and basically grab some shares off the shelf, register them, and then give them out to investors. And so ATMs are required to be done on Form S3. But you can also register other blocks of securities. So SBET, last week they registered their block of securities from the initial pipe they did with a Form S3. So they had that S3 up. They were able to just pull the shares off the S3, register it, and they were good to go there. So kind of do two different forms. The S1 is a little more comprehensive, has more information in it, and you kind of have to do a new Form S1 for each block of shares that you want to register. Form S3 is a little more flexible, and as long as a company meets some specific criteria, they can use that Form S3.
Got it. Helpful overview. And just to clarify for folks in the audience, we have two S1s. So can you maybe talk about the difference between the one filed this morning versus the one filed last week?
Sure. So the one filed last week was for the two prior pipes, private investment and public equity that we did. So the first one was the convert round that kind of got this all started. And this was kind of led by Pantera with Kraken, Arrington, and some others. So we registered not the bonds, but we registered the shares that could be converted from the bonds, and then also the warrants there. So that's what we registered there. And then also the $24 million pipe that we did, common equity pipe that we did a few weeks later. Those shares are also being registered on that statement. So once that statement's effective, those investors now will have those shares free and clear, and they can sell them, they can loan them out, they can use them as margin collateral to lever up or do whatever. So that's what that first one was for. The second one filed this morning is for the ELOC itself. And so this one, once declared effective, will allow us to tap that facility to raise more capital there.
Got it. Thanks. Thanks for the breakdown. Maybe Joseph, can you talk about just higher level what some of the other fundraising methods that are available to crypto treasury companies are? So we've spoken a little bit about the ELOC, made a reference to ATM, but some of the other paths that are available for continued crypto accumulation and capital raising.
Yeah, sure. So I know we've said this, I don't know, a lot of times, but the way the treasury strategy companies kind of work generally is if the company trades at a premium to its net asset value, if the say market cap or whichever measure we're looking at is larger than the crypto assets on the balance sheet, say MicroStrategy people say trades at 1.6, 1.7, 2x, somewhere in that range, then the dilution is accretive on a Bitcoin yield or Bitcoin per share basis, and likewise we focused on SOL per share growth. So each of these methods for public company financing, we've seen all of the ones that I'm about to name used by treasury strategy companies. And of course, we just mentioned ELOCs and ATMs as ways to kind of leak shares out into the market over time. And Parker mentioned the two previous fundraisers we'd done as PIPEs, private investment in public equity. That's another way. And that can be broad. It can happen a variety of ways. The round could be priced. It could be a convertible pipe, say, or a variety of them. Another fundraising method is convertible debt. So with we of course we've seen MicroStrategy do this. Our first fundraise led by Pantera was convertible debt financing. And what this means is the investor invests the money to the company. They hand over the cash, and in exchange for the cash, the investor gets a right to purchase stock in the business to convert their bond into stock later. Typically, this happens at a premium to the current stock price, and sort of in exchange for that premium, the investor benefits from being like higher up in the capital stack. So if there's like a default or a bankruptcy or a bad situation, then there could be conditions under which the investor gets the convert investor gets their money back before common shareholders get paid out. So investors think of or some investors anyway think of convertible debt as kind of a risk adjusted return profile where they get a little bit less on the upside because they're paying a premium to the stock price, but they're downside protected on the other end. And then some of these often carry like interest payments, a coupon. Ours are 2.5% per year, but we've seen other treasury strategy companies, namely MicroStrategies, kind of famously raised these zero interest convertibles, which has been interesting. But ultimately, I think there's sort of two levers on the convert, there's the interest rate or coupon and the premium to the stock price, premium on the conversion price. There's other levers too, but these are the big ones. And I think ultimately the these are related, right? If you're going to pay higher yield on the convert, then the premium is going to be higher, and likewise in the other direction. And then, of course, the other um, fundraising method that we've seen, especially or maybe only used by MicroStrategy so far, as from treasury strategy companies, is preferred stock issuance. So for preferred stock issuance, the issuer, the company, writes an S1. Essentially, there's a bunch of other steps, but they file an S1 to IPO or list preferred stock, and the preferred stock can. There's an enormous variety of what one could do with a preferred stock. It could be a convertible yield-bearing preferred stock, say. So under certain conditions, the preferred stock converts into common stock, while it also may pay yield. Or maybe it's not convertible and it's yield-bearing. Maybe it has an expiry date, or maybe it's a perpetual where it may pay interest forever, or dividends. So there's quite a variety of funding methods available um, for the treasury strategy companies. So we so far have just talked about ELOCs, ATM, pipe, converts, and preferred stock. Monologue over.
Maybe
very helpful monologue, actually. Go ahead, Parker.
So I say maybe I can jump in. So that's that's kind of the TradFi playbook for raising capital, which is great. But I think there's some other things that could be done that you might see companies doing in the future, as more of these stocks move on chain. So there's some cool things that we've been contemplating or we've been kind of gaming out. Nothing official here, no information to share, but if you put your thinking caps on, you could start to see how some of the more DeFi focused fundraising mechanisms might work for a DeFi focused TradFi company. And I've been saying this a lot, and people seem to like it. But hopefully in the future, we don't have DeFi and TradFi. We just have finance. And so some of the methods that have been popularized in DeFi hopefully come to TradFi, and vice versa. And so we think about that a lot as well.
Helpful. Okay, this next one here is for John. John, can you tell us when exactly will the S1s be effective?
Great question. I'm sure a lot of people have that question. Yeah, so we can't really speculate on the timing. The SEC process, varies depending on the company, depending on the circumstances. I will say it's not unusual for smaller reporting companies to receive comments or be declared effective quickly, but we'll respect, the process ultimately and update shareholders as appropriate.
That's an A+ answer. As IR, I grade you A+ on that answer, John.
Oh, thank you, sir.
That was helpful. I'll take this next one right here, which is someone asked, does the S1 filing mean you are raising capital right here, right now? To which I will answer, not necessarily. The filing registers shares for potential resale by RK Capital. It does not obligate us to raise immediately, even post effectiveness, the S1. We, as mentioned, entered into the ELOC and filed the Form S1 so that if and when we choose to raise capital, we can do so in a I'll call orderly and efficient way. And any capital raises will be disclosed to the appropriate SEC filings when required. All right. Can you comment on RK Capital or their role? Joseph, you want to comment on that one?
I don't think we can comment on that, can we?
I will just say I'll save you on this one, Joseph. RK Capital is the committed investor in our ELOC. All material terms are disclosed in our public filings, and we are not commenting beyond what is already filed.
So I think that we did file that they were an investor in the previous fundraise. So maybe I can't say anything else, but I'd say I was pretty happy about that.
Yeah, maybe I can jump in there. Like RK's great. We've had a relationship with them for a little while now. You'll notice they've I believe it's public. I hope I'm not sharing something, but they've done some of these other treasury strategies as well. In terms of like quote unquote TradFi guys that understand the treasury strategies, they're way up there, close to the top in my view. So great guys. This is not just a single transactional thing. Hey, we needed someone to do an ELOC. Like they've kind of been in our corner for a while, and will likely continue to be in our corner for many, many years to come. So great partnership here, and we're pretty excited about it.
Thanks, Parker.
All right, I'll take this next one right here. Similar to what John just answered. So John's question was, when exactly will the S1 be effective? And this question is, what happens next after filing the S1? So what I'll say is, once an S1 is filed, the SEC can either review the filing or declare it effective without comments. If comments are issued, we respond to them. And once the SEC is satisfied, the S1 can be declared effective by the SEC, and then we'd be eligible to issue shares under the ELOC. Again, I will emphasize, this doesn't mean we are raising capital immediately. It simply means we've put in place the process to do so in the future, subject to market conditions and our strategic objectives. So hopefully that is helpful. All right. I know we've touched on it a little bit here, but I'm actually going to go back to sort of to square one, which is for those who may not know, like, what is an ATM? Like, well, what exactly does it stand for? We've kind of like alluded to it a little bit over here, but just mechanically, someone could walk through how it's different than an ELOC.
I can take that one. So an ATM essentially allows the company to directly sell shares into the market. So typically the way this is done is you have a relationship with one or multiple investment banks. If you look at MicroStrategy's ATM, they've got 39 banks on there or something crazy. It's not quite that, but and so then they essentially will call up their banker throughout the day and say, hey, I want to sell some shares into the market. And so there can be some terms there, some, hey, I don't want to sell below this price, or, just track the VWAP for the day, or track the TWAP, or, just go ahead and sell this number of shares or this dollar amount. It's pretty flexible, right? And it's ultimately the company directly pulling shares off that shelf registration and then selling them into the market via one or more brokers that are kind of facilitating that. An ELOC is different in that you are working directly with an investor, and you are, as a company, simply giving them or selling them the shares based on some predetermined formula for the pricing. Now, the investor, in many cases for these ELOCs, will go out and sell those shares into the market, but they don't have to. And in fact, some investors will keep a portion of the shares that you sell to them just on their balance sheet. They're long the stock, they like the name, and they want to be using this to accumulate. So in a very extreme scenario, there could be an investor that does an ELOC with a company, and they never sell any of the shares in the market. The company gives them the shares, or sells them the shares rather, and they just keep them. And so mechanically, it is a little different than the ATM. Whereas, in the ATM, the company is directly selling shares into the market to whoever's out there buying. Versus the ELOC, the company is directly selling shares to one investor, and then that one investor can do with those shares, as they like.
All right, next one I've got here. For the S1 filed this morning, how much? I see what the phrasing here is. Basically, how much of the ELOC was filed for registration this morning out of the 5 billion of capacity? Can someone comment?
Sure. So for that one, we did an initial $1 billion tranche. The reason we did one instead of all 5 is partly filing fees. So we have to pay the SEC quite a bit to even be able to register the shares. And so we want to start with 1 billion, see how long that takes to use, and then we can upsize from there with another registration statement. So no sense in paying the SEC more upfront than we need to, right away. So it's kind of why we started a little smaller.
But we can just register more tranches later if we want to. On another
we could do another S1 the day after this one goes effective for another, billion or 2 or 4 or whatever.
Yeah, if we wanted to. Yep.
Right. If we wanted to.
All right. Another question. Does the ELOC have a maturity date or expiration?
Yeah, it expires in 3 years.
Okay, 3 years, 1 billion filed. Is this your only fundraising channel going forward? I'll take that one. Answer is no, as Joseph mentioned previously. ELOC is just one tool, still a number of other structures like 144A convertibles, pipes that we can lean on as needed.
Yeah, basically everything that we described as possible fundraising tools earlier, except the ATM, is available, whenever we, I don't know, I guess decided to fundraise and had investor interest in doing so.
Okay. Last one for me, guys, and then if you want to make any parting comments, then we can leave it at that. But a question here is, how is the price per share determined in the ELOC?
That is a great question. So there's a formula, and it uses I believe this is all 8K'd, but
Yeah, it should be.
Cool.
Yeah.
It uses the 1-day forward TWAP. So just the way the example would work is we could call up RK on let's call it a random Tuesday. And we could say, hey, we want to sell you, 100,000 shares. And they say, okay, the TWAP, time weighted average price, throughout for Wednesday, minus a 1.25% discount, will be the price that we sell those, in this example, 100,000 shares to RK for. So it's it's very market driven, and it's, it just kind of is done without too much of a discount, kind of just right at the price, wherever the price is trading. And that discount is there in case, for RK, in case the market really moves and they aren't able to, sell the shares that they want to sell and then end up being underwater. So with these ELOCs, these larger blocks of shares, you typically see a little bit of a discount.
Yeah, only other thing I will throw in there is that this kind of structure is pretty common in ELOCs, and I'll say was negotiate on terms we believe are, favorable. Gives us, obviously, as we mentioned, flexibility to raise when conditions are strong without sort of locking in any onerous discounts either. So
yeah, and I guess the last thing I'll just reiterate here is this is all at our option. So we could decide after registering the ELOC or having the ELOC go effective, we could decide that we don't actually ever want to use it, or we could decide we're going to use it for a little bit and then stop. This is entirely at our discretion. And of course, we only will use it when it's going to help shareholders and is accretive to SOL per share. Is ultimately our goal. It's our responsibility to shareholders as a leadership team, and responsibility to ourselves as very large shareholders as well. So we're going to use this tool to help us, but it's not any kind of it's not something that's forced on us, basically.
Yep. All right, last one that came in my inbox, and I'll leave you guys with parting thoughts. Can you walk through how issuance under the ELOC impacts net asset value? So what I'll say is high level. We've talked about accretive dilution before, and this idea of capturing the spread is made famous by Michael Saylor. To the extent that shares are issued above net asset value, any issuance under future ELOC would be accretive. Obviously, if below net asset value, it would be dilutive, and you can imagine that we will follow that playbook accordingly. So our goal is to ultimately deploy capital in a way that grows SOL per share. All right.
Sorry, DK. Can we say any more about that, or that sounded overly cautious?
This is me being giving my IR language. So if you would like to say more on how I'm going to say ELOC issuances impact net asset value, the floor is yours.
The question, I don't think I can see this question. Is it specifically about net asset value or about NAV multiple?
It's specifically about how any issuance under the ELOC might impact net asset value.
Got it. Okay. Yeah. So, let's say, I don't know, markets closed today. If we were effective, if the registration was effective, and we were actually turned on, ready to go, we'd call up the investor, RK, and say, "Hey, buddy, we want you to, buy, I don't know, $1 million worth of stock, or however many number of shares that is approximately, for example." And then they say, "Okay, cool. I'll send the wire out tomorrow." And then they either have the stock available to them, or we have to transfer it to them from our transfer agent. Then they can keep the stock if they want to, or they can sell it. It's their stock. They bought it from us. And then we have the cash. So presumably, since the purpose of the company is SOL accumulation, we use the proceeds of the fundraise, or most of the proceeds of the fundraise, or whatever kind of safe hedging language we can come up with, and just buy SOL with it. And of course, we'll then stake the SOL to a validator, or whatever else we're going to do with the SOL, but very likely stake it to a validator. So in that case, we issued $1 million worth of stock, and we bought $1 million or almost $1 million worth of SOL with it. So the net asset value simply increases by $1 million worth of SOL in my example.
Yeah, and the reason for the hedging language that Joseph highlighted is that there may be cases where we use a little bit of the proceeds from the ELOC to, for example, cover some OPEX. So rather than having to sell SOL or sell revenue, because all our revenue is denominated for the most part in SOL. And so rather than having to sell off some of that revenue, like we can just allow all that revenue to accrue as well. So our goal is SOL accumulation here, but we do also have to, pay some bills. And so sometimes we might use some of the ELOC proceeds for that. Hence not being able to commit to 100% SOL buys with every single ELOC purchase always.
Thank you.
So.
All right, guys. I think that pretty much covers it. I don't see any other questions coming into to my email inbox here, so we're pretty good. Thanks, Parker, Joseph. Any last parting thoughts here?
All good. Thanks, CK.
All right.
Yeah, I guess
well,
I'll just jump. I'll just
yeah,
jump
go
in
ahead,
real
Parker.
quick, and I just want to say thanks to everybody. I see many of the same faces on this spaces that we've had on many of our prior spaces. So, and many of you, I see you guys bull posting about what we're doing. So I just want to say thank you. Thank you for being along with us since the very beginning. Many of you all in here are, very much the true believers, and it's just really great to have a community of people around us, kind of cheering us on. And just, I don't know, makes me excited to wake up on a Monday morning at 4 a.m. and get started, because I know there's a bunch of people counting on us and a bunch of people in our corner that are rooting for us and want to see us succeed. So thanks to everyone here, really appreciate it. And yeah,
Monday morning, as if you weren't working on Saturday morning too, you absolute animal. Anyway, that's a wrap, guys. Thanks everyone for joining us on this. Space was recorded, will be posted to the account. If you're interested in more content like this, you can obviously follow our blog. Appreciate the time, and as Joseph wrote in our blog post, in service of SOL per share, we thank you.